Ever wonder how bonds can play a crucial role in a diversified investment portfolio? You know, achieving financial independence is like climbing a mountain. It's a long, challenging journey, but the view from the top is absolutely worth it. We'll explore the ins and outs of bonds and how they fit into your investment strategy. So, if you want to take your first step towards financial freedom, or if you're simply looking for ways to improve your existing investment strategy, stick around. What exactly are bonds? A bond is like an IOU. When you buy a bond, you're essentially lending money to a company or government. In return, they promise to pay you interest periodically and repay the principal amount when the bond reaches its maturity date. But why would you want to invest in bonds when there are so many other investment options out there, like stocks and real estate? Well, that's where the concept of diversification comes in. Imagine you're building a house. You wouldn't want to build it on just one pillar, right? The same goes for your investment portfolio. Putting all your eggs in one basket can be quite risky, especially when markets are volatile. Diversification helps spread out the risk by investing in a variety of assets, like stocks, bonds, and real estate. Now, bonds do have some unique advantages that make them an essential part of a well-rounded portfolio. One of the key advantages of bonds is their lower risk compared to stocks. When a company or government issues a bond, they're legally obligated to pay back the principal and interest to bondholders. You can expect a more stable return on your investment. For example, Sarah decides to invest in a tech company's stocks. The company is doing great, and Sarah is seeing some impressive returns. But when the tech bubble bursts, and the company's stock price plummets, Sarah is now left with a significant loss on her investment. On the other hand, you invest in a government bond. While the returns might not be as high as Sarah's tech stocks, you'll be earning a steady income from the interest payments, and when the bond reaches its maturity date, you'll get your initial investment back. Bonds offer a sense of stability in an unpredictable world. This is particularly important if you're nearing retirement or looking to preserve your wealth. Now, not all bonds are created equal. There are various types of bonds, each with its own unique characteristics and risk levels. Let's go through some of the most common bond types. First up, we have government bonds. These bonds are issued by national governments, which are usually considered the safest type of bonds. In the US, they're called treasury bonds. Next, we have municipal bonds. These bonds are issued by local governments or municipalities, and can offer tax advantages for investors. There's also corporate bonds, issued by companies looking to raise capital for various reasons, such as expanding their operations or launching new products. Corporate bonds tend to have higher interest rates compared to government bonds, but they also come with a higher level of risk. There's another type of bond called high-yield bonds, or junk bonds. These are bonds issued by companies with lower credit ratings. Although they offer higher interest rates, they come with a higher risk of default. Last but not least, international bonds are issued by governments or companies from other countries. Investing in international bonds can add further diversification to your portfolio, but they also come with risks related to currency fluctuations and political stability. So, how do you choose the right bonds for your portfolio? That's where a little research and planning come into play. When building a bond portfolio, it's essential to consider factors like your investment goals, risk tolerance, and time horizon. Here are a few actionable steps to help you get started. First, you have to determine your objectives. Are you looking for a steady income, capital preservation, or growth? Knowing your goals will help you select the appropriate bonds for your portfolio. Next, you will need to assess your risk tolerance. Are you comfortable taking on more risk for potentially higher returns, or would you prefer a safer, more predictable investment? This will help guide your decisions when choosing between different types of bonds. Just like with any other investment, diversification is key when it comes to bonds. Make sure to include a mix of different bond types, maturities, and issuers in your portfolio to minimize risk. It is also wise to keep an eye on interest rates. Changes in interest rates can impact bond prices, so it's essential to monitor them closely. When interest rates rise, bond prices generally fall, and vice versa. Finally, if you're new to bond investing or want a more hands-off approach, consider investing in bond funds or ETFs. These investment vehicles allow you to access a diversified portfolio of bonds with a single investment. Now, let me share a personal experience with you. A few years back, I decided to diversify my investment portfolio by adding bonds to the mix. I was a bit hesitant at first, as the returns seemed lower compared to stocks. But over time, I've come to appreciate the stability and predictability that bonds offer, especially during market downturns. In fact, I've heard countless success stories from people who have used bonds as a key component of their diversified investment portfolio. For instance, I know someone who was able to retire early thanks to the steady income generated by their bond investments. That's the power of financial independence. We've covered a lot today. We've explored the world of bonds, their importance in a diversified investment portfolio, and how to build a bond portfolio that aligns with your goals and risk tolerance. Bonds may not be the most glamorous investment option, but they can provide stability and predictability in an otherwise unpredictable financial landscape. So, what are you waiting for? Start exploring the world of bonds and take one step closer to financial independence. And if you found this video helpful, be sure to like, comment, and share it with your friends and family. Don't forget to subscribe to Family Fire 2025 for more practical tips and insights on achieving financial freedom. Until next time, happy investing!